Okay, I think we are going to start. Good afternoon, and welcome everyone to Iroquois Valley's Annual Shareholder Meeting. I'm Donna Holmes, Senior Vice President of Investor Relations. We are going to begin today with a 35 to 40-minute presentation during which several board members and staff will share some prepared remarks. After the presentation, we'll have about 20 minutes of Q&A. If you'd like to ask a question, please submit it with the Q&A button at the bottom of your Zoom screen. We'll do our best to answer all the questions, but if we're unable to respond to everyone, we'll follow up with an email. I'm going to ask Lacey to share some Zoom tips and a way for you to view the screens and the speakers at the same time. So Lacey?
Absolutely. I believe the default view is speaker view, but if it's not, you can change the view in the top right corner of your screen to show the active speaker video. This will allow you to be able to see all the content on the slides while our panelists are presenting. But if you have any questions, feel free to message me in the chat and I am happy to help troubleshoot. Also, I would like to note that we are recording this webinar and we will be posting the webinar and the slides to our website within the next week.
Great. Thanks, Lacey. And I think we're ready to start the official meeting. So I'll now turn the mic over to Dr. Stephen Rivard, the co-chair of the board of directors. Doc, it's all you.
Good afternoon. It's now 1 o'clock Central Time, and the 22nd annual 2022 annual meeting of the stockholders of Iroquois Valley Farmland REIT, PBC, will please come to order. I am Dr. Steve Rivard. I'm the co-chairman and co-founder of the company. On behalf of the entire team, we want to welcome you and express our thanks for your attendance at this meeting. In order to expedite the flow of business, we'll be the formal matters to be voted on at this annual meeting. After the formal portion of the meeting has been adjourned, several members of the Iroquois Valley staff will present on various aspects of the company's business and financials. The notice of this meeting was given to all stockholders as of record as of the close of business on July 25th, 2022. The preliminary Benz, our inspector of is that more than 50% of the voting interests of shares outstanding and entitled to vote are present in person or by proxy at this meeting, constituting a quorum. A quorum being present, this meeting is declared open to proceed with its business. We will now conduct the annual meeting as it relates to the proposals to be voted on by the stockholders. The first item is the board of directors favors the election of the following individuals as directors: Andy Ambriole, Dorothy Berlin, Dee, Olivia Watkins, and Steve Rivard. Andy Ambriole and Olivia Watkins and I are nominated to be elected to serve as directors of the company for 3-year terms. Dee Berlin is hereby nominated to be elected to serve as director of the company for a 2-year term. The board has not received any other nominations in a timely manner. Can I now have a motion to close the nominations, please?
Hello, I'm Anna Jones-Crabtree, board member, and Dr. Rivard, I move to close the nominations.
This is Arnold Lau, also a member of the board of directors. I second the motion.
Thank you. The nominations are now closed. There are no other items on the agenda that require a vote, so we will now proceed to the vote on the election of directors. If you've already submitted your proxy, no further action is needed unless you wish to change your vote. Thank you so much to everyone who's already voted. We are very pleased with the response to our online voting system this year. According to the preliminary report of the Inspector of Elections, each of the persons nominated to be director of the company has been elected. Congratulations to everyone. The Inspector of Elections will complete the final tabulation and certify election results following the close of business today. Final Vote counts will be announced via a public filing with the SEC. All planned matters for this meeting have been completed, and there being no additional business to properly come before this meeting, the formal meeting is therefore adjourned. Before I hand over the mic to Dr. Anna Jones-Crabtree, Vice Chair of the Board, I would just like to make a couple of comments. This has been a very historic year for us. It's a very exciting year. The board and staff worked hard for several months, which culminated in our hiring of Bill Stoddart as our new CEO. And with an eye toward the future, we've added Chris Zuehlsdorff as our new COO. I'd like to thank Andy Ambriole stepping in as our interim CEO for the several months it took for us to conduct our search. I would also like to thank our very professional staff for their work and efforts to keep the company running smoothly during that time. I actually believe that we're on a record pace for new farm financing and purchases already. This was all made possible by you, the investors. I'm deeply appreciative. Thank you, investors, for your faith in our mission. I congratulate all board members for being elected to a new term. I would like to welcome especially Olivia Watkins as our newest board member. Lastly, I would like to thank David Miller, my dear friend and co-founder, for his vision and effort to build Iroquois Valley Farmland REIT into what it has become. And we'll hand the mic to Anna Jones-Crabtree.
Hello, everybody. I'm Anna Jones-Crabtree. I'm excited to serve on the board of Iroquois Valley. I'm a PhD civil and environmental engineer. I currently work 3 days a week as the Director of Data Governance for the Northern Region of the Forest Service, which is a government agency that oversees 195 million acres of our nation's national forests and grasslands. But what I'm most excited about is the farm that my husband and I, Doug, have, which is now 12,500 acres in north central Montana. We're first generation farmers. We have 20 some crops every year that we grow in rotation. Only 13 of those are for harvest. So in any given year, 26% of our land is in non-crop conservation, and about 27% of our land is in cover crops. We are also Be Better certified and have over 350 acres of native pollinator habitat that we've seeded over the years. And we run an apprentice program because we're so committed to what the future of organic agriculture looks like. Iroquois Valley has been really wonderful relationship and super important to Doug and I being able to scale our farm. And I am very excited and honored to serve as the vice chair of this board and look forward to the future. I know both Dave and Bill, they have both been instrumental in our farm personally, and I think the future of the company is in great shape, and I'm excited to continue to build on the momentum of the positive work that's happened over this last historic year. And with that, I also want to thank Andy Ambriole, who did an amazing, tremendous job of stepping into the leadership role of interim CEO and Ask. He kept things moving during this nationwide CEO search that we did. And Andy, I just can't thank you enough for bringing your whole self to that role. Man, I totally understand what it's like to juggle Zoom calls while in a tractor cab. And I just offer you a big Montana sky. Thank you for playing the role that you did. And so with that, I'm going to turn it over to Andy so we can get down to the business update.
Well, yeah, thanks, Anna. And what a wonderful blessing technology is today to be able to multitask and get business taken care of, whether we're sitting in an office in the city or out remote on location from a farm field. So I know I've taken my fair number of meetings and calls from the seat of a tractor this year, and it's been a wonderful experience. Not too many other companies could you be able to do that. So that's been a wonderful thing for me personally, and Iroquois Valley has just been such a wonderful company to be affiliated with here over the years. So I just like to welcome everybody to the meeting. I appreciate you taking the time to share your day with us. I know there's several other things that you probably could be doing, but we appreciate your time, and hopefully it will be a valuable experience for you. If I had to talk about this year and only use one word, I would probably use change. And we're only 8 months into the year, but at times it seems like the years drug on. We've had a lot going on, a lot of changes. As of our last annual meeting, we had a founder transition to a new CEO that ended up not being successful. And we learned very quickly that that is very common in this type of situation. So I stepped in as interim CEO towards the end of November, kept things moving along while we initiated a nationwide CEO search with the help of a third-party search firm. We were able to use their wisdom and guidance to kind of help us through the process as far as evaluating what we wanted in a CEO, goals, bringing a lot of our stakeholders together, and it ended up being quite a long, drawn-out process, but well worth all the time that was invested in that process. And I would just like to extend my thanks to the search committee as well as the board in general, because I know that everyone put in a lot of extra hours this past year, and a lot of those hours will be an investment into the company's future. So that's wonderful that we're at where we are now, and kind of coming out on the other side now. So starting off there towards the end of the year, a lot of year-end things to finish up. To say I was overwhelmed at first was probably an understatement, but very quickly it was very evident to me just how wonderful of a staff that we at Iroquois Valley have. Being on the board, I knew most of the staff, if not all the staff, but really didn't have the opportunity to work very closely with them until I started as interim CEO. And very, very quickly, I just the wonderful staff, the dedicated staff, the willingness to go above and beyond expectations was just such a tremendous help, especially in the beginning as we made the transition and pivot and kept the ball rolling. So we had a very, very big year. At the end of 2021, we were actually sitting on quite a bit of cash, almost $10 million. And so very early in 2022, it was very evident that we needed to get that cash working for us. So one of the first things that I did was pay down a lot of our bank debt, and that interest savings translated right to the bottom line. We also had, so far this year, we're on record pace for the number of deals that we've closed. So we've been buying a lot of farms, we've been doing a lot of mortgages, and kept very, very busy keeping that capital deployed. And it has been, with the current land prices, it has been very difficult to get deals that are economic for both us and the farmer. And so that's added another layer of complexity. But special thanks to our farmer relations department and underwriting department for their diligent work on getting so many new deals closed. So that with all the new deals so far, that puts us up to about 60 farmers in 17 different states. We continue to have a very broad and diverse farmer base as well as geographic base. So that's very, very good, for your investment that we have expanded outside of our roots, which are the Midwest. We still have a very deep pipeline as of now. We've got a couple deals that are working towards closing, and we expect several more deals to come in before the end of the year. Fall is usually a very busy acquisition season. So we expect to remain busy throughout the rest of the year. So all that being said, if you're thinking about a new investment or an additional investment, now is a wonderful time. We could really use more capital to deploy, and our minimum investment is just $10,290. So very, very good time if you're thinking about it. So as of our last stock valuation, we were up 11%, which is very, very good. Most of that's fueled by the strong land market. Our dividend this year was 95 basis points. Again, very, very strong historically for us as a company. Coming up with the next valuation, we anticipate land prices remaining strong, and so we anticipate our next valuation to be up as well. So all that to say that your investment in Iroquois Valley Farms financially should be very, very rewarding. And all that to say, you know, that's not counting our environmental and social impact too. Especially and then some of the time that we're in right now, where some of the stock indexes are lower for the year. We have been successful, and we believe that food and farming will continue to be a winner in the future. So far this year, as a fundraising summary, we've raised about $4.5 million, and that's been split equally amongst equity and our notes. We anticipate third and fourth quarter to be very, very strong in that as well, because as of most of you know, our equity offering was closed for most of the first part of the year as we repriced our shares and launched again there mid-year. We've got a lot of work to do the rest of the year. You know, as I kind of over the past month or so been passing the torch off to Bill. He's got a lot of work ahead of him, and we know that he'll be up for the task. It's been great getting to know both him and Chris, and we've got a really, really bright future here at Iroquois Valley with the talent that we have, with the new talent that we've brought on the last couple months. We have a very, very bright future. So continue to expect and hear big things from us, because the future for organic food, for organic farming, for supporting farming communities, and doing that in a way that is just for everybody, for all races, all genders, everyone. Is what we're all about. So I would like to thank the board for the opportunity of the past 6 or 7 months. It's been a fantastic learning experience for me, and it's been great getting to know everybody at Iroquois Valley on a more of a professional level and especially on a personal level. We're a family. It seems like more than a business. So appreciate everybody that's here, that's willing to be a part of that family. We couldn't do what we do without your support, and we thank you for that. Yeah, it's just great to have everybody. So I'm going to pass the torch on to Dave, our co-founder and co-chairman. Here you go, Dave.
Thanks, Andy. And, you know, we couldn't have done any of this without you. Andy's been with us forever. I think you're going to earn a pension, you know, just by being on the board here. So that I think you get a double one that way. I said I'd stick to the script. So And by the way, congratulations. I understand there's a baby boy that just joined your family, Andy, a couple weeks ago.
Yep, 2 weeks old. So one more to the crew.
Fabulous, fabulous. I also want to thank the committee as well. You know, it's a thankless job, and spending the better part of a year on that. You know, and all those Zoom calls with Andy in the tractor cab. You know, we always felt like we were there too. So some of us will miss that, I think. Oh, I guess we can keep it going. Well, you know, don't cut us off yet. On the search committee, just to be specific, it was a 5-member committee. Dee Dee Danforth Berlin was the committee chairman, and along with Dr. Steve, Dr. Anna Jones-Crabtree, Malika Mafalala, and Andy. So thank you very much. I think we got it right. So as I introduced Bill Stoddart, I can tell you that when I heard Bill had thrown his hat into the ring, that I was immediately relieved. Bill and I have known each other for a while. Bill has been part of the social responsible investing, you know, mantra for years now, which means that he goes to the annual SRI in the Rockies conference, where we've been many times. Bill is well known within the SRI community, and being part of that group defines one's passion for healing our planet. It really does. I mean, it's unless you've been to that conference and you've looked out and seen all the people that sit there and that are trying to figure out ways to work together, solve problems, you know, improve the environment. It's hard to imagine, and it's so uplifting to see that. And each year, of course, that group gets younger, and that's a great thing to see as well. So Bill's part of the younger crowd, so we're looking for. So it was at an SRI conference, actually, in 2011, where Iroquois Valley had the great benefit of meeting Natural Investments, and it was Malika on our board that put together a group of people so we could introduce ourselves. So, you know, it is a hell of a group, and I would encourage any of you investors and advisors, et cetera, to attend their conferences. They're also in nice places and nice times of the year, so that doesn't hurt either. But really being part of that group, and I say there's a care about changing our world for the better. That's accepted, and anybody that doesn't feel that way obviously wouldn't fit in. But I also had the pleasure of working with Bill on a deal, and it came out of our association at the SRI conference, and I think Dr. Steve was with us when we started talking about some of this, but Anna mentioned that you know, both of us had helped. What happened was Nature's Path, who was a lessor for some of the acres, actually, what, 3,000 acres, right, Anna? 3,000 acres, or was it 4,000? But it was a big chunk that really was put up for grabs. And so, you know, part of this, we're always focused on new growth, new acres, but you got to retain what you have. And so, you know, that's just a given. So you got to do what you need to do. And we spent a lot of time on marketing, and we decided that Bill should help with this, that he should find the capital for sort of the local deal. So we named one of the farms Curlew Grasslands because of a bird, which is sort of a curlew sandpiper bird in Montana. That's about all I can tell you about the curlew, but Grasslands was because there was an awful lot of grass on that particular farm and CRP revenue that went with it. So Bill got the job done, found the investor capital, local, and we closed on the whole deal. So we retained those acres for Anna and Doug. So anyway, it's this type of responsible can-do attitude and cooperative work ethic that has earned Bill the trust of the whole SRI community. I have great confidence that Bill understands our generational vision and will further solidify our roots as a public benefit company. So it is with great pleasure that I introduce our new CEO, Bill Stoddart.
Thanks, Dave. I want to share a few important thoughts, so I've prepared some remarks. First off, that picture is 10 years old. So Dave, I appreciate the youth comment on my youth, but I can't claim that as much as I might otherwise hope. So, but first off, I want to thank Dave and Doc, the search committee, the board, Andy, and the whole staff for bringing me into the circle. I also want to thank all of you who have joined us on this call and over the past years as investors, and those among you who are farmers as well, for your trust and commitment to our vision of supporting our organic regenerative farmers who produce good, nutritious food while stewarding our soil and water resources to benefit people on the planet. I am honored and grateful for the opportunity to lead Iroquois Valley Farms and to help build upon the solid legacy Dave and the team has built over the past 15 years. And I'm excited to help guide the company further in its catalyzing role in ag finance. I come to this work with humility. My background as a carpenter, an educator, and as an entrepreneur has taught me that life is not a spectator sport. So I come to this work with the understanding that the challenges we need to address and the opportunities we have in front of us are significant and will require a great deal of ingenuity, cooperation, and faith in ourselves and one another. I've spent the last 15 years focused on using finance as a tool to help support vibrant ecosystems and thriving communities, to steer the self-interest embedded in capitalism toward greater self-determination rather than personal enrichment, and to create opportunities for catalytic capital to build equity for the entrepreneurs, farmers, and others in our communities that the rising tide of wealth has often washed over. And I believe that at least part of my purpose here is to help us come together as a community of investors, farmers, innovators, and collaborators to address one of the most pressing challenges of our time: food security in an era of climate change and social transformation. Some years ago, I came across an American Psychological Association article from Y2K, the year 2000, that revisited the neurobiological fight versus flight response to external stress. Perhaps to nobody's surprise, nearly 70% of the participants in over 200 studies that article examined were male participants. The article went on to elaborate on the female response of tend and befriend, or as I have come to understand it, build community as a response to external threats. This article also reinforces what I believe is a core concept about economic activity. Our deepest trust relationships are our inner circle of family and friends. But just beyond that, where subsistence no longer meets our needs, we depend upon one another for our mutual survival. We grow corn, make fish hooks, and establish trust relationships based on the exchange of goods and services. And this is exactly where I believe Iroquois Valley continues to distinguish itself, in its recognition of the importance of and commitment to community. We are all in this together, and we are compelled to share the resources and gifts we've been given to support ourselves and one another along this journey. I'm particularly drawn to the opportunity for Iroquois Valley to continue its leadership role in addressing the needs of organic farmers, and in particular, those farmers and farm families that have been left out, disenfranchised, or dispossessed by the incumbent system. We have an obligation to the land and to one another to work collaboratively to ensure our collective survival, and hopefully bring some joy along the way. Again, many thanks to those who have joined this call and who continue to support our work and vision. And thanks to the Iroquois Valley Farms team for their ongoing commitment to the vision we all share. Next up, I'd like to introduce our COO, Chris Zuehlsdorff, who joins me as the newest team member here at Iroquois Valley. Thank you.
Great. Thank you, Bill. It's great to be part of Iroquois Valley and excited to join the team. I've long admired Iroquois Valley's work, having been involved in a nonprofit that supports food and agriculture in the Hudson Valley in the New York area. I grew up on a dairy farm in central Minnesota, so this opportunity very much takes me back to my farming roots. Prior to joining Iroquois Valley, I spent 18 years in the asset management industry, investing capital on behalf of individuals and institutions across a wide range of strategies and asset classes. And I'm excited to now be part of a team deploying much needed capital into organic agriculture and the food system more broadly. It's one of the best impact investments that we can make, in my opinion. The farmer first approach is what attracted me to the platform. It's critical to understand the farmer perspective, the challenges facing them, especially in the transition to organic agriculture. Iroquois Valley's structure enables it to provide farmers long-term mission-aligned capital, a key competitive advantage. And while it's only been a month, I'm very impressed with the strong team of individuals who are committed to Iroquois Valley's mission. I'm excited to work with them to advance our work. As COO, I'll focus on the day-to-day operations of the organization and key initiatives that will support Iroquois Valley's growth and strategic vision. I'm excited to roll up my sleeves and work with our farmers, investors, and build a best-in-class farmland investment platform. We are fortunate to have a strong and diverse investor base to partner with us on the mission. And I look forward to meeting many of you and our farmers in the weeks and months ahead. Thank you. I'll turn it over to Mark Schindel to conduct a financial review.
Okay, hello everybody. I'm Mark Schindel. I'm the CFO at Iroquois Valley. We're going to be taking a look at our financials this afternoon. We're going to be looking at revenue and expenses. We'll take a look at how we're doing from a fundraising standpoint so far this year. We'll take a look at FFO, or funds from operations. We'll look at some balance sheet stats and then see how we're doing from a pipeline standpoint so far this year. Slide. What you'll see is record revenue growth for the 6 months ending June 30th, 2022, which is exciting. We deployed our excess cash into income earning assets, which is terrific. We're a conservatively capitalized company, and we have a robust deal pipeline and expect continued growth. Slide. Let's start with revenue. Here we show June year-to-date revenue for every year since 2014. As you can see, increases have been steady year over year with no declines, and June 2022 is no exception. This year, we saw revenue increase by approximately 18%, or $259,000, from $1,416,000 in 2021 to $1,675,000 in 2022, driven mainly by a $146,000 increase in rental income and a $77,000 increase in mortgage interest income. So very strong growth. The growth is driven by additions to our portfolio. At June 30th, 2022, we owned 54 farms as opposed to 48 farms last year, and we owned 48 mortgages versus 40 mortgages last year. Slide. Next is a breakdown of revenue for 2022 versus 2021. You'll see here that the revenue mix is very consistent year over year. Over 80% of our revenue comes from rental income and mortgage interest income. Operating line interest income is still a small part of our revenue stream, making up only 4% of revenue for each year. Slide. Let's look at operating expenses. In total, they were flat at $1.2 million for both year-to-date 2021 and 2022. As you can see from the graphic, 4 categories of operating expenses make up over 90% of the total. This year, employee expenses were up only 2%, or $13,000, from $596,000 in 2021 to $609,000 in 2022. Headcount is down. In June 2021, we had a total of 14 employees, and in June 2022, we had a total of 12 employees. But the decrease in headcount was offset by salary increases. The graph shows that employee expenses made up 52% of our operating expenses in 2022 compared to 50% last year. Professional fees increased 8%, or $21,000, from $267,000 in 2021 to $288,000 in 2022. This was mainly due to higher filing fees related to our public offering,
higher accounting fees due to our larger balance sheet, and higher consulting fees related to our CEO search. Professional fees were 25% of our operating expenses in 2022 versus 22% last year. Real estate expenses were down $109,000 or 65% from $168,000 in 2021 to $58,000 in 2022. The decrease is due to the fact that we're accruing real estate expenses this year instead of expensing as we receive bills. So as the year progresses, the total accrued will increase and real estate expenses will approach historical levels. Real estate expenses were only 5% of our operating expenses this year compared to 14% last year, but this will normalize as the accrual increases throughout the year. And finally, G&A expenses were up $53,000 or 64% from $82,000 in 2021 to $135,000 in 2022. The increase was due to the purchase of an underwriting software as well as a new director compensation plan. G&A expenses were 11% of our operating expenses this year compared to 7% last year. Slide. Okay, this graph shows interest expense as a percentage of revenue as of June 30th of each year from 2020 to 2022. The large increase in 2021 was due to interest expense on mortgages we took out on properties in our portfolio to fund land purchases and mortgage assets. With the increases in our cash balance, as Andy mentioned earlier, we were able to pay off that debt at the end of 2021, which brings our 2022 interest expense back down to 15% of revenue, which all drops to the bottom line. In dollar terms, interest expense decreased $63,000 or 20% from $319,000 in 2021 to $256,000 in 2022. Slide. Let's move on to fundraising. This slide shows our very strong fundraising track record over the years. 2021 was a record year for fundraising with almost 20 million raised. And as Andy mentioned, this year, despite the fact that the REIT offering was closed for 3 months, we're on track to raise almost as much as we did during our record-breaking 2021. We're really pleased by all the support we've gotten from our shareholders and note holders. A big thank you to all of you. Slide. One of the side effects of our strong fundraising is that we built up a large cash balance. Getting this money deployed into income-producing assets increases our profitability and is a high priority. You'll see from this slide that our cash balance peaked at $11.7 million in November 2021. Since then, we've deployed the cash into new deals to the point where we've run our cash balance at June 30th down to $2.6 million. At this point, we definitely need to continue our strong fundraising in order to fund our pipeline, which we'll be discussing in a minute. Slide. Let's take a look at FFO, or funds from operations. 2021 was very strong at $351,000. Year-to-date, June 2022, we have an FFO of $149,000. Given where we're at with our revenue and expenses, I expect that the 2022 FFO will meet or exceed the 2021 FFO. Slide. Here we show the trend of fund from operations over revenue. It ranges from 2.3% to 11.2%. 2021 showed 10.9%, and year-to-date June 22, we're at 9.4%. I expect we'll end up around 10% for the year. Slide. Let's turn to the balance sheet. Here we see our receivable levels as a percent of assets. June is a higher month for receivables since land rents are billed twice per year, with one of those months being June. But even so, receivables are in line with historical levels. Our credit quality is stable. We're very focused on maintaining the quality of our underwriting and making sure we're doing good deals. Slide. Here we show our bad debt expense year over year since 2014. Our year-to-date bad debt expense is $56,000 higher than the $39,000 spent for 2021. We've reserved more substantial amounts against one farm in the portfolio that is a late payer and another in the portfolio in need of restructuring. We're not seeing a trend in the portfolio towards more defaults. This higher bad debt expense is due to these one-off situations. Slide. This slide looks at the debt to asset ratio. It shows a downward trend since 2017, and it stands now at 26% and within the range of historical norms. We're comfortable with this level of debt. I don't see this percentage getting outside the range of 25 to 30%. Slide. This slide just shows our steady increases in equity value and the strength of our balance sheet. We have 63.8 million of equity at the end of June 2022, up from the 61.7 million at the end of 2021. I should mention that we are now able to modify our share price more than once per year. We're now evaluating the timing and process for revaluing our shares. Slide. And here is our deal pipeline. You'll see that we've already closed 12.4 million of new deals this year, which is a lot for us. This total consisted of 16 new deals, of which 6 were purchases, 8 were mortgages, and 2 were lines of credit. You'll see the 2 million of deals we have committed to fund, plus the 2.5 million worth of deals we're considering now. And these numbers obviously don't include new deals that will continue to come in the door. So we're on track to meet or exceed last year's investing record of 17 million. So we'll still need to work very hard to continue to sell shares and notes to fund our pipeline. And that's it for me. I'm going to pass it back to Donna.
Thank you, Mark. And thank you all for sending in some questions. I will read them now and direct them to the right person to answer them. And bear with me on this first one. It's a long question. Many organic dairy farmers are struggling, and some have been forced to sell their herds as the amount paid per 100 pounds for their milk is less than the cost to produce that milk. Costs are being driven by increased demand, exacerbated by disruption in the international supply chain, and barriers to entry in the U.S. market due to high cost to transition to organic for feed inputs. How is Iroquois Valley supporting its dairy farmers and working with other farmers to fill this gap? What percentage of Iroquois Valley farms are dairy? Andy, do you want to take a stab at that?
Yeah, sure, I can. So yeah, dairy farming historically has been a very, very tough enterprise. There has also been, along with the issues raised, there's also been some of the companies have shut down some of their routes, especially to the smaller farmers. So in some very unlucky areas, there have been some farmers that have been forced to go out of business if their only marketing plan was to wholesale to one of those buyers. Fortunately, we've seen the change for farmers to change marketing plans to do more on-farm sales, to do more retail sales and direct-to-consumer sales, where they're not reliant upon a wholesaler to come pick their milk up every week. And a lot of times that does include downsizing the herd, but you're moving a smaller volume of milk at a higher value. So that's one thing that our farmers have done to kind of offset some of those problems. As far as the exact percentage to our portfolio, I would have to punt that to one of our farmer relationship managers. I'm sure they have that number at the tip of their tongue. Unfortunately, I don't. But yeah, dairy is a very important part of farmers in our portfolio.
And we can follow up with the percentage of farms in the portfolio that are dairy. Arnie, this question is directed at you. Are you retiring since there is now a new COO?
The short answer is yes. And those of you who know me are not surprised to hear, but the word "but" also plays in there. In a way, it's a slow motion retirement. I'm in discussions with the staff and members of the board. This move of mine to sort of fade away has been out there for a while. Really waiting now for Bill and Chris gratefully to have come on board. And so what I anticipate is over the remainder of this year, and quite likely for a good part, maybe almost all of next year, handing things off primarily to Chris, but then others among the team, to facilitate a smooth and as seamless a transition as possible. I anticipate as I hand off more of the, say, ongoing work that especially goes with investment management and sort of property management, which is accounts for a large area of our invested portfolio, that I'll thereafter still be around, very much like the work on the investment committee, which I've been on for many years and hope to remain on for many years, and then provide, I'd say, support more in the administrative and archival areas until it's a comfortable time for me to step away completely. So it's happening, but it's taking a while, and I don't want to do it in a way to disrupt the good operations we have right now. Thanks.
Excellent. Thank you, Arnie. Mark, I think this question is directed for you, or is for you. Was there any significant change in 2022 bonus rents versus 2021?
Bonus rents, I assume that means variable rent. Yeah, we did have slightly more variable rent this year than we did last year, which is good, and I expect some more coming in as the year progresses. Variable rent is one of those things where it's very hard to plan, very hard to predict, but 2022 we should see a meaningful amount more of variable rent than we did last year.
Thanks, Mark. And I think you're still on. Could you explain what constitutes real estate expenses?
Sure. For the farms we own, we pay real estate taxes. So we recoup that from our rent, but we pay the bills, and that's really what the real estate expenses are, is the real estate expense for all the farms that we own. And as I mentioned, this year we're accruing for those instead of expensing them as we get the bills.
Excellent. How are farms preparing for climate change, drought, floods, and heat? That's a hard one. Anybody want to take a stab at that?
Yeah.
I would nominate Anna to kind of tell some of the things that
right.
they're doing on their farm.
Okay, Anna, you're on.
Certainly. Yes, climate change is real and it's here. We are continuing to see highly variable growing conditions on our operation in north central Montana. So I cannot speak specifically to the other farms in the portfolio, but things that Doug and I are doing are looking at integrating more animals into our cropping system in the hope that we can build soil a little faster and also reduce some of our field operations by having cattle or sheep eat down our cover crops. We're also looking at extending our crop rotation out to include a longer term perennial phase. We're already at a 7-year crop rotation and adding alfalfa that would stay there for 3+ years to be a soil builder. So that's something we're looking at. We're also looking hard at each of our fields and where we have lighter, more erodible soils, discussing opportunities to bring those back into grass and take them out of the cropping system. So those are things we're doing specifically with the farm system. We're also exploring how to sell some more value-added sales, such as rye. We've been lucky to work with a distillery outside of Glacier National Park that is taking our rye. So hopefully we can achieve some greater income on smaller amounts of our crops. And we've also started what we're calling a CSSA. It's a community supported stewardship agriculture, where we're looking for individuals to become shareholders, not necessarily in the land itself, but in the service of stewardship. Because as you know, doing soil building is not something that you can get paid for every year. Cover crops are acres that we don't necessarily get paid for. So just short synopsis, I'm more than happy to share more about our farming system and how we're trying to be more resilient. But I will freely admit it's a tough time to be a farmer on a planet with an unstable climate.
Thank you, Anna, and thank you for all your hard work. That's very impressive. I think this question is best for Dave. Does Iroquois Valley have any investments in the agroforestry, food forest space, or other types of perennial food systems?
Well, we've gotten started with regard to one farm. We have other farms where we have a growing number of forestry acres. It's gotten harder and harder to buy farms these days. So, you know, to a small extent, we're buying more farms that have more forested acres. So that's one thing. That's one way we can sneak in there without overpaying for a farm. At Rock Creek Farm in Will County, Illinois, we planted about 9,000 trees, mostly in a windbreak, but also trees that are in fruit trees that are con trees, persimmon trees, pawpaw trees that are in alleys, pecans, yeah, northern pecans. And that's a different land use and crop than what most of our farmers are planting. So we're doing some research there, and we're working with a couple nonprofits at that farm. You're welcome to come and see the trees, and anytime you want. It's just south of Chicago by about 45 minutes. But we don't own any agroforestry companies. It's an interesting thought. And I'm going to let Bill comment on that whenever he wants.
I would add one quick thing on other perennial food systems. We have a Montana farmer who's also doing some work in Kernza. But I think, you know, the question brings up an important point more broadly about, you know, diversifying in the area of climate change. And we also have to recognize that putting all the burden on our farmers to take all the risk as well is something we as a community need to continue to help support them on.
Thank you, Dave and Bill. And Bill, I think I'm going to continue with you. The question is, Iroquois Valley has done a very good job of diversification from a single farm in northern Illinois to a national portfolio of assets with diverse crops. As we continue acquiring assets, what are your specific targets, either geography or operations or products where we are looking to expand? That's it. Sorry, that's it.
Yeah, you know, future strategy, I think, you know, is something that we're all discussing internally, you know, not only as to what the company is prepared for capacity-wise, and what types of things we believe need to happen to support a regenerative organic food system more broadly that is in stark contrast to you know, the conventional systems that you know, are 98+% of our food system. And so, you know, I alluded to this idea of community in my opening remarks, and really the fact that we really have always relied upon these trust networks as a way to build out our relationships is central to our strategy for how we intend to grow in terms of our geographic outreach. You know, we are always looking to look at the communities that are sort of food centers, as well as communities of farmers where there are good support networks. Organic farming is different and requires a whole different mindset, not to mention tool set and strategy for implementation. And it's something that is probably best not done just in isolation. And so we continue to work internally on what our capacity is to help support farmers, with any and every tool that we can develop to do so. And as far as the specific aspect of regional, again, we think bioregions are probably the most, sound strategy for exploring what that regional outlook might look like, or regional outreach might look like. As far as product development, everybody's well aware that loan products have been and our leases have been a central part of our growth. If we think about integrated capital, which is something I've had the great fortune to, learn a tremendous amount about here, both through my own work, but also in collaboration with others, colleagues in the industry more broadly. Donor dollars, grant dollars, and ultimately equity investing, I think all will come to bear in terms of what we as a company hopefully are able to work with others in collaboration or partnership, as well as potentially building out some of those ourselves as we move forward. But anything and everything will be sort of rooted in the sound strategy and diligence that the team has really developed over the last 15 years, and think that having those strategies well considered, well modeled, piloted, so that we walk before we run, or aim before we shoot, so to speak, are really important parts of any growth strategy that we're going to undertake.
Thank you, Bill. And I think I'm going to stick with you on the next question. Approximately what % of farms in the REIT are at high risk of water scarcity affecting farm economic viability? I think we'll probably have to get back to you on the exact percentage, but Bill, if you want to comment just generally about how water scarcity is affecting farms and their economic viability, that would be great.
Well, water is pretty central to crop growth and livestock health and well-being, not to mention human health and well-being. And, a changing climate, as we continue to see, from our energy grid all the way to, water management on the Colorado out west, or, tiling needs in our, upper Midwest farms. Everything is changing very rapidly, and we're going to be very much challenged to address the variability. I think that's the thing that is more pressing, is how can we help our farmers again, really address the fact that at times there's going to be way more water in a really short period than anybody's really able to handle, and at other times, there may be extended periods of drought. So, we're certainly seeing drought in the West, and continue to see that. You look at a place like, Dallas, I believe, got 25% of their annual rainfall in the last couple of days, or some crazy number. 1,000-year floods, in Kentucky and out on the Yellowstone where I live. It really is the variability issue, and ways in which we can, help our farmers by preparing them to address that, and also helping support them through, other means in terms of, value add and, stewardship type of income. I mean, again, it's going to be all hands on deck, and we'll be developing strategy, and are really excited for input and support as everyone out here on the call sees fit.
Great, thanks, Bill. And thank you, Anna, for your added comment that there is significant droughts in Europe also right now, which is affecting their farming community. Moving on to the next question. Have you seen the film Kiss the Ground about regenerative farming? It predicts increase of this farming it predicts increase of farming over the next few decades. Are you in touch with this community? I'll take that one. We have been in touch with some of the people behind Kiss the Ground. They have recently started a new platform called Regenerate America, and it is established to work on the 2023 Farm Bill. So we have spoken with that group. We've been on webinars with them, and although we do not directly lobby ourselves, we do partner with other groups that support the Farm Bill and work to get what we would like to see passed as legislation. And the next question, many of our farms in the Northeast, Pacific Northwest, Southwest, West, and a smaller number in the Midwest have perennial aspects to their operations through grassland, silver pasture, forest foraging, and prairie restoration, to name a few practices throughout the portfolio. I guess that's a comment, sorry, not a question. But this one is a new regenerative organic certification pioneered by Rodale Institute having an impact on the profitability of organic regenerative farming or on Iroquois Valley's acquisition strategy? Does anybody want to volunteer for that question?
I can take a stab at it.
Thank you, Randy.
It's the Regen Organic. It's a wonderful add-on certification. Some of our farmers have taken advantage of that when it makes sense for their own individual markets. As a company, so far we are just requiring to USDA organic standards. And as far as profitability, it is some additional expenses to get an add-on certification. But like I said before, some of our farmers, where it makes sense for their own individual markets, are taking advantage of it, and they're seeing good results with it.
Great, thanks, Andy. The next question is about our operating loan initiatives. Do we still have that program? Arnie, do you want to take that question?
Sure. Sorry. I'm trying to get where I can see things there. We continue to consider operating loans when farmers ask it on a case-by-case basis. That's really the driving aspect of it. It's a modest thing at this point. We have used it a number of times so far. There are a number of these loans out there, but as Mark pointed out earlier, it accounts for a fairly small amount of our deployed capital. I don't really have much more to say than that. I think, well, I would say it's sort of a challenging thing. It's getting a bit away from our primary strength on the purchase and lease and purchase financing that we provide. So we keep it in our toolbox, but at the moment we're not necessarily actively seeking to increase it. But that's under continuous evaluation as we evaluate any of the tools we have with respect to the others. So yeah, basically right now it's there, but we've also not necessarily gotten much request for it either. I hope that helps.
Yes, thank you, Arnie. We probably have a minute or two. If there's any final questions, please feel free. And we did just get one. Is the board monitoring the political climate around SRI-oriented investments, specifically regarding certain state legislators aiming to limit or restrict the deployment of capital into these types of investments? It seems as though, as far as damage has been limited to public pensions and publicly traded companies, but is there any concern about the future viability of investments like Iroquois Valley?
I'll take that one.
Okay, thank you. Chris.
To me, the politics around it obviously are important, but fundamentally ESG is a risk management tool. And if politicians wish to wade in and start throwing their weight around and suggesting that people should abrogate their fiduciary responsibility in favor of politics, well, I guess then that is somewhat their prerogative. We as a company, I don't believe, that's going to affect us negatively. I don't believe it's ultimately going to affect the ESG industry broadly. I think that the attacks, are clearly short-sighted, clearly about political gain, and fundamentally undermine the entire, prudent man rule, so to speak, that a trust obligation for anybody who's managing other people's finances are obligated to uphold. And so, again, I think there's certainly a lot of hay that they're making, but it's not unique to this industry or to any of the others. And fundamentally, I think, the same illogical approach has more of an ability to undermine the thesis upon which they're building their argument than converse. So, I know that it's a reality we're all going to have to address and deal with. But again, if our fiduciary duty is to uphold our clients' interests and our trust responsibility is to do the same and act prudently, then ignoring environment, social, or governance concerns would fly directly in the face of logic and our respective duties. So, again, I hear the cry, and I also feel that it's something that we can certainly defend against. Although, as we're well aware, maybe logic is not a prevailing perspective that is being presented on the other side there. But again, to me, it's not political. It's about risk management.
Great. Thanks, Bill. And I think we're at time now. So I'd like to close the webinar by thanking you all for attending. I hope that the meeting was informative and that we answered your questions. We will be sending a short survey next week, and we'd really appreciate your feedback. It does help in us plan for the next year. And finally, please look out for an invitation that will be sent by email in the next week or so. We are hosting a meet and greet webinar with Bill and Chris on September 8th at noon Central Time. You will have the opportunity to address your questions to our new CEO and COO. And again, from me, I thank you all for attending, and thanks to my colleagues and the board for participating today. I hope everybody has a great afternoon, and I look forward to meeting some of you on the forum tours tomorrow and speaking to others in the next weeks and months. Thanks again. Bye now.